If you have rental property or an Airbnb, then I want to show you 5 questions I've asked HMRC and how the answers they gave me directly have to do with the amount of money you're paying them each year in the form of tax. Can mortgage interest be deducted as an expense for short-term holiday let? And this is a bit complicated because this is regarding finance costs and recording those as a business expense. Finance costs is the interest of a loan, in this case a mortgage I've taken out to buy the property which I'm using to rent out. And there are certain criteria you need to meet if you want to write the 100% of that annual interest on your mortgage as a business expense. However, if you don't meet that criteria, then in most cases, the basic rate of 20% is going to be applicable for you. In my case, it's 20% for this financial year. So my question states, I have read conflicting information on whether mortgage interest rate can be deducted as an expense. And over here I'm saying conflicting because I was pretty confused whether I can or cannot deduct 100%. The answer might depend on several factors, so let me share my case. My case is that I have a residential mortgage for my first home where I live. I do travel a lot because of my work and family, so I can afford to rent out my flat for more than 105 days a year. I'm saying 105 days because it's one of the criteria I've stumbled upon online when doing my research. So let's continue. I rented out on Airbnb and I have set the maximum stay length as 30 days. That's another criteria. They say if you want to be considered a short-term holiday let, then you're not allowed to rent out the property for longer stays, which is considered more than 30 days. So far, being compliant with the furnished holiday let criteria, I guess. So question is, can I deduct my mortgage interest as an expense? Only, of course, for the period my flat is rented out. So again, remember the PIM 2010 rule, wholly exclusively or partially. I'm asking here whether I can deduct a proportion of the interest only for the period I'm using the property as a rental business. For example, month's rent days are 15 out of 30 and my mortgage interest for the month is 200. Therefore, the question is the £200, the mortgage payment, times 0.5, half a month, which is 50% of the entire month. We said 15 days out of 30, which is 50% occupancy, which you can turn to 0.5. 200 times 0.5 equals £100 of month interest eligible to be written off as an expense. Is that doable? They come back saying, hi Clement, mortgage interest payments are treated as a deductible when computing profits in respect of a furnished holiday let. So a furnished holiday let is a type of rental property. So when you meet certain criteria, you can apply different taxation rules. The finance costs and interest restrictions set out in the PIM 2250 onwards do not apply to loans taken out in respect of furnished holiday lets. To qualify as a holiday let, the property must meet the availability condition, i.e. your property must be available for letting as furnished holiday accommodation letting for at least 210 days in the year. From your comments, it does not appear you meet this condition. And they're referring here because I said 105 days a year instead of actually calculating how many nights I've rented it out. And they've given us a link. Now if we open this one, it takes us to the guidance for furnished holiday lettings. If we scroll down, we'll see some of the conditions we need to meet so that your property can be regarded as a furnished holiday let. It says it needs to pass all occupancy conditions. And the first one is the pattern of the occupancy. If the total of all lettings that exceed 31 continuous days is more than 155 days, this condition is not met. So that's why I said my bookings did not exceed 30 days. So each booking is no longer than 30 days, which is keeping me safe from this one, 31 continuous days. And the other condition is that if you do have longer bookings, more than 31 days, all of those bookings, when you've combined all of the days for them, they should not exceed 155. So for example, you have 3 bookings for 31 days, which is 93. That does not exceed 155. So in theory, you're safe over here. For example, you have 5 bookings for 32 days, which is 160 days combined, where you exceed the 155 mark and you've not met this condition, which automatically makes your property not a furnished holiday let. And the conditions we do need to meet are called availability condition and the letting condition. The availability condition is the time you're making your property available to the public to be rented. So in this case, it needs to be at least 210 days. 210 days is 7 months or 7 times 30. Let's say a month on average has 30 days. So you must make your property available to be rented for at least 7 months. If you're a live-in landlord and you're using your property, you should not be using it for more than 5 months because that would breach the 210 days availability condition and would render your property not eligible for the furnished holiday let. And this is why they say do not count any days when you're staying in the property. HMRC does not consider the property to be available for letting when you're staying there. And this is exactly what I mentioned. So if you're in the property, it's not available to the public. The next condition is the letting condition. You must let the property commercially as a furnished holiday accommodation to the public for at least 105 days in the year. And this is why I mentioned 105 days in my question, because I've probably tried to reference this condition. Do not count any days when you let the property to friends or relatives at 0 or reduced rates. That is not commercially let. Do not count longer term lets for more than 31 days. We've mentioned that already. Unless the 31 days is exceeded because something unforeseen happens. For example, there's a blizzard outside and the guest cannot vacate the property. If you do not let your property for at least 105 days, you have two options, which I'm not going to cover because in my case, just going back to my question, I do rent out my property for more than 105 days a year. And that's why I've just stated I cover the second condition. However, they do mention the first condition, which is 210 days availability in the first year. And then below I continue to explain my situation and they continue referencing that document, which again is pretty straightforward if you get to it. Make sure to subscribe to the channel so don't miss out on any other helpful videos. Good luck with your rental property and I'll see you again in another video. Goodbye.